So I was just looking at a post, and it was referencing a popular social media real estate investor, how in the past, for the last 10, 20 years, he was preaching, don't buy a house. Buying a residential home is a bad investment. Put your money in cash flow real estate, things to that nature. So he bought 2 homes recently, one in Miami and one in Malibu, California. And then I was reading some of the comments. Hey, I thought you never said, buy a home, and, oh, you're a scam artist. You're talking one thing and you're doing another thing. All the stuff that you hear from the interweb. That's the danger of using definitives or blanketing a general statement to 7.5 billion people. I don't like using these certain words, the definitive words, like the always, everyone, because it's dangerous, because each person's situation is different. Their goals, their desires, their aspirations, their risk profile. What's right for one person doesn't necessarily mean it's right for another. And that's the problem. When you're listening blindly to people on the web, through the news, and reading books, you have to understand where they're coming from. You have to understand the root of the message. Then ask yourself, is it applicable to me? Can I apply it to my personal situation? Does it make sense for my goals and my resources and what I want to accomplish? I tell my clients, right, when they're purchasing a home, there's economic-based decisions and there's emotional-based decisions. Sometimes you have to find the balance between them both. Sometimes a primary resident isn't the best economic and financial decision you could possibly make. Money is better spent elsewhere, whatever the case may be, but emotionally, it might be the best decision for you and your family, because you could settle in a specific school district, you can decorate it the way you want, you feel like you have ownership in something, potential for gaining appreciation, you're going to live in it for a long, long period of time, and you're not transient, you're not hopping from one property to the next and might get caught in a downtrend. Do you understand what I'm saying? It's one thing about blanketing a statement, and then he tried to express or push his beliefs on people because, he really believes in cash flow and he manages other people's money, etc. But here's the thing. Be careful on who you listen to. And the statement might not be false. Like buying a primary resident, it's really, in this market, it looks like a great investment. You bought it for $1 million. Now it's worth 1.7 million 12 months later. It's just a crazy time. It happened before. Will there be some type of correction? Potentially. Will it be back in, back like 2008, 2009? Probably not. As interest rates rise, it might put a little downward pressure on asset valuations, residential and commercial, etc. The point of this message is there are smart people out there. They're doing big things in all different spaces: real estate, both residential and commercial, stocks, bonds, mutual funds, cryptocurrency, fix and flips, selling online with Amazon. There's so many different ways to increase your income and put your money to work for you in the best way. What might make sense to one person, purchasing a luxury car might not make sense for some people. And even an exotic car. People look at other people that purchase exotic cars and saying they're crazy to spend $200,000, $300,000, $700,000, $5 million on a car. But you got to think, their situation potentially allows them to. They might be using it for marketing and advertising their business. It allows them to get into a certain group and start conversation. Who knows? They might have a passion for cars. They might invest in vehicles. They understand how to buy a car and then use it and enjoy it and look at it and then sell it for more than they purchased it for. The same with luxury watches, which I love. Some people love them and collect them like myself. Other people flip them. And some people are like, are you out of your mind? Spending $30, $50, $100, $500,000 on a watch? You buy a Swatch and it, for $30 or $100 and it tells the same time. It's not about the time. It's about how you perceive it. Do you enjoy looking at it? Do you like it, how it makes you feel when you're wearing it? Could you enjoy it and then sell it for more than you purchased it for? Whether it's buying a home, buying jewelry, purchasing a luxury vehicle, an exotic vehicle, what's right for one person is not necessarily right for another person. So listen, take all this information from books and social media and podcasts and just absorb it. Question it. Question, how does that apply to me? Does it make sense? Can I benefit from that information? And that's how you take the information. Don't take it as face value because, one person says one thing and it might be right for his situation and it might not make sense for you emotionally, physically, and financially.